Welcome back, everybody. Your typical bull here, and today we are going to talk about how you can treat your trading like a business. So what we're going to be going over is developing a trading plan, backtesting your trading plan, and then keeping good records with the trading journal so that you can revisit your trades and figure out whether you are needing to adjust your strategies or whether it is performing as expected. And but before we get into it, let's first remember to like, subscribe, and comment. Your support is very much appreciated, and it really helps get the channel out there to people who may need it. So, trading plans. First off, I want to say, if you don't have Microsoft Office, LibreOffice Write is free. It's completely free, and it's basically a clone of Microsoft Office. It comes with spreadsheets, presentations, and document writer. So check out LibreOffice if you don't have Office and you want the free alternative. So this is a very basic trading plan. So let's just go over it. I have back tested this plan sufficiently and tested the setups in a paper trading account prior to moving into a live account. The expectancy is positive. So this is my very basic risk to account for each position. I want to risk 2% of my total capital. Expected return on each trade is going to be 2 times my risk. Maximum amount of capital at risk at 1 time is going to be 10%. So that's 5 positions. Time frames that we'll trade on. I want to trade on the 4-hour and the daily charts. I want to search for setups for 2 hours each day. And let's just say I want to search from 6 p.m. to 8 p.m. The setups I'm going to take, and just before we get into this, this is not a strategy that I suggest. I haven't tested it. I'm just using it for teaching. Let's say the stochastic must be under 30 for long setups and over 70 for short setups. The moving averages, 50 must be above the 200 for longs, below the 200 for shorts. And then let's say the candles must be 2 candle reversal patterns with confirmations, or single candle pin bars with confirmations. So that's my very basic trading plan. So now we're going to go over how you can actually test this trading plan to find out if it works. So we're going to be looking at Apple. Basically what you want to do, scroll all the way back to the price, the end of the price data, which is what I have already done here. And then you're just going to scroll through 1 candle at a time and find setups. So let's get to the point where we have a 200-day moving average first, which starts here. 50-day is above the 200-day. So oversold. Is this a 3 candle reversal pattern? No. So I keep scrolling 1 candle at a time until I find setups. Is this a 3 candle reversal pattern? No. Scrolling, scrolling, scrolling. Looking for setups based on my plan. Stochastic's now oversold. Looking for, is that a 3 candle reversal pattern? This is a 3 candle reversal. And this candle does not close higher, so it doesn't confirm. We can't take that trade. This is a 3 candle reversal pattern. I personally wouldn't take this because this candle is super far above this candle, but just for posterity's sake, we're going to say that we decided to take that. So our risk is here. We want to target roughly 2 times that with our stop loss. That's about roughly 2 times that. And we're looking to see if that would win or if that would lose. And eventually, we'll hit something. here, that trade would lose. So what we're going to do, just imagine that this is a new blank sheet. What we are going to do is backtest for stochastics. We'll call it the stochastic setup. So we're going to start with Apple stock. We're going to do long trades, wins, losses. One loss. We're going to do short trades, wins, losses. And then we're just going to scroll through each candle one at a time. See, now the 50 is below the 200. So we're looking for short trades now. We're looking for oversold stochastics, or overbought stochastics, I'm sorry, and 3 candle reversal patterns to the downside. And we don't get that here. We're not going to get that here. Continue, we continue, we continue. We're looking for, that's technically a bearish pin bar, but the risk would be huge. And we're going to keep scrolling, we're going to keep scrolling. Looking for those 3 candle reversal patterns. Keep scrolling, and now the 50 is back above the 200, so we're looking for long trades again. Right here. That's not a 3 candle reversal because this candle makes a lower low. So we're just scrolling, and it's really important to understand that you have to do this. This is so important. You have to backtest things because you're not going to have the confidence to know if it works or if it doesn't work unless you test it. If you test something and you know it works, the emotional aspect of it's gone because you know it works. So this is a 3 candle reversal pattern. So here's our risk. We'll draw a box. And then we want to target roughly 2 times that for our reward. About there. And some people, I used to do it like this, but I actually still do it like this when I backtest things. I color the boxes, but just to keep this video simpler, I'm not going to be coloring these boxes. And that trade would lose right here. So what we're going to do, we're going to go back to our thing. So far, we have 2 losses and 0 wins on Apple stock. And we're going to keep scrolling and looking for 3 candle reversal patterns. It's a bullish pin bar, but it does not confirm. Bullish pin bar does confirm. So that's the trade we would take based on our strategy. Stochastic is under 30. So there's our risk. We want to target roughly 2 times that. Should be here. Right, is that 2 times? Let's see. Roughly. And that trade would lose also. So that's 3 losses in a row. That's a 3 candle reversal pattern. There's your confirmation. Target roughly 2 times that. That trade wins. So now we have 1 win and 3 losses. And you just continue to do that. You keep going through price data. Keep going through price data. You look for your setups, and you can leave these boxes on here so that you can go back and review all of the trades. And if you have a negative expectancy, then you can go back and add some more rules to it. Maybe let's just say right now, I've come to the end of my testing. maybe I want to add another rule to this. Maybe I want to add the RSI. Just for example, let's say the stochastic and the RSI both must be oversold. And you can do that. You can keep tweaking this until it makes money. And that's how you need to backtest your strategies. You scroll through one candle at a time and you test the setups. And then you go to another stock and you test the setups. And you go to another stock and you test the setups. And you do this until you can't possibly do it anymore. Then you take a break and then you come back and you do it some more. This is important. You have to backtest your strategies. And there is super expensive software that's going to cost you hundreds and hundreds of dollars to use that can do all this stuff for you automatically. And if you want to go that route, that's fine. I commend you. But doing it this way, it gives you exposure to candlestick patterns, and it teaches you to recognize things that you need to recognize. And it'll be slow at first, but it gets faster. Now, let's talk about trading journals. This is important as well. So I'm going to teach you how to make a very basic trading journal. This is LibreOffice again. So the most basic of trading journals, what you need is the date. So I'm going to make that bold. And I don't really know how to use spreadsheets. I was never trained in Microsoft, but this stuff is basic. It doesn't have to be super in depth with all the graphs and the bar charts and all that stuff. I use a regular old calculator and just type it in a spreadsheet. So you want the ticker, you want to know what you traded. I'm sorry, date entered. Let's make that a little larger. The entry day, the ticker symbol. You want the price. You don't have to put these in here, but this is what I put in here. Your stop loss. I'm sorry. Put your strategy used. Oh, I can't all spell. Strategy used. There we go. Okay. Now you want to put in our stop. Our target. And then we want to put in, I like to put in the total equity used. So if I bought 100 shares of a $1 stock, I would put $100 here. So total equity, and then you can skip a space. You want exit date, exit price. And your PN, which stands for profit net loss. Let's just type in profit loss. And then we can make this large for comments. I do recommend having this comment section. Okay, so now let's say this is, what month is it? 5/18. Let's just say month. Oh, type that in here. Fold it. Month of May. 2021. Fold that. Let's say I got into 5/18/21. Today I got into Joe stock, and I paid $1 per share. Let's say I bought into it based on my stochastic oversold. My stop loss is going to be 0.75 cents. My target, let's just say it is 1.50. Total equity use would be $100. Exit date, let's say I day traded it, so I got out of it today. And let's say I actually hit my target, so $1.50. So my P&L would be $50. Comments. Let's should put in the comments first. I'm just trying to show you how to fill this out. So let's just say SPY, which is the S&P 500, is up. This stocks sector is performing well, and it is forming a pin bar. And has confirmed. Okay, so this stuff is important. And then I like to come down here, and let's say I took only this 1 month, this one trade in the month of May, and I like to put in totals. So let's do total. So my total P&L for this month would be $50 because I only took one trade and I won. If you had 5 or 6 trades, this is important. And now, at the end of every month, I can go back to my charts, look at the 5/18 date, look up the Joe ticker, and see what went right. I can do this with every trade. You should review all of your trades. Figure out if you need to improve something. And this stuff is so important. Like, I know it's boring, but you have to treat your trading like a business. In business, you make money. That's going to about conclude it for this video, and I appreciate everybody for watching, and I hope this helps you in your trading. So please remember to like, subscribe, and comment, and we will see you in the next one. Cheers!